All right, guys. So overall, Powell came across dovish today, and there was a nice nugget of information that he said in his speech. He said starting at the beginning of April, they're going to be reducing the amount of treasuries that are coming off their balance sheet from 25 billion to 5 billion. So that's reducing quantitative tightening, which is good for stocks. It has the treasury yield fall, which happened today, and then financial stocks went higher. So the XLF sector, which are the financial stocks like JP Morgan, Goldman Sachs, Robinhood, SoFi, these all caught a bounce, and the XLF bounce off their 200-day moving average, which was really good to see. And when financial stocks are going up, that's healthy for the stock market. A lot of rallies begin when financials lead the way. So this could be the start of something here. Okay, obviously we need to see follow through still, okay? But also with the Fed meeting, they're still penciling in 2 interest rate cuts this year. That's huge. That's what we wanted to see. That was unchanged from the last meeting, okay? Now they do expect growth to slow down a little bit, okay, this year, and then inflation to tick up a little bit. But overall, it's not anything to crack the economy or cause a recession yet. Now, obviously, like I've been saying, we're going to monitor the data. A lot of people are worried what the aftermath of these tariffs are going to do to the economy, and I get that. But for now, we have a window of opportunity here while things are still okay where we can make some money, okay? And I do believe even after the tariffs, guys, April 2nd, if, there's the tit for tat where, the countries retaliate and do higher tariffs on us, and then we come back at them. Yes, that could cause stocks to go down a little bit, possibly retest the lows we saw, last week. But I think it's going to be a higher low, and that this is more priced in now. Whereas last month, we didn't know what was going on. He's talking about all these tariffs, right? And the changes, it really messed up, the confidence and the sentiment of the market, and stocks fell based on that fear and uncertainty. Now we have a little more clarity, but like I said, anything can happen after, right, with those retaliation tariffs. So that's why I think, yes, stocks could fall a little bit, but overall, we are in the middle of the bottoming process. And I do think personally that the lows are already in, that we have bottomed. And now with financial stocks going up today, I can see other stocks starting to follow, maybe slow though. It's not going to happen quickly like that V-shaped recovery is still going to be choppy, okay? But investors will regain confidence over time. And like I said, I think institutions will start coming back in, and then there will be a short squeeze. So it happens a little at a time, guys. It's hard to see that it's actually happening, okay? But this is why I like the dollar cost average into the millionaire maker stocks in the portfolio, the best of the best. These are big themes, which these stocks will bounce quicker than a lot of the other ones as well, okay? We have winning names in there that got beaten up. We're talking about valuations we haven't seen in a very long time, and big theme AI-related names, as we know, guys. We have them all in there, guys. So don't second guess it like I've been saying. But overall, this was a really good Fed meeting, a good speech by Powell. It came across dovish. Like I said, kind of acted as an interest rate cut with the reduction of the quantitative tightening, again, reducing the amount of treasuries coming off the balance sheet. And then with them still penciling in 2 interest rate cuts, the interest rate sensitive names like Upstart, for example, caught a nice lift. All right, so we got the names in there, guys. So I hope you have started buying these, because like I said, stocks will climb a wall of worry. We'll come out of this, guys, and we're going to make a lot of money on the recovery.